Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. on a Monday, May 29th, 2023. And I'm an American and a U.S. Marine, so before we jump into things, I want to take just a minute to acknowledge the sacrifice of our nation's honorable dead. I strongly believe in personal freedoms, so anyone who sacrifices themselves for the freedoms of another is someone I can feel is worthy of respect. Now, welcome back to the Crypto Overnighter, where we have no sponsors, no agenda, and no BS. But we do have some news, so let's get to it. First up, we have a groundbreaking development in the crypto space. Bitcoin has just welcomed its first BRC-20 stablecoin, Stably USD. Prime Trust is the custodian for this one, which means Stably USD can be redeemed one-to-one for US dollars held in collateral by Prime Trust at FDIC-insured banks. The custodian undergoes external audits by the network firm to ensure proper backing of the tokens. Stably USD can be issued and redeemed through dollar transfers over Fedwire and SWIFT. The leading stablecoins, USDC and USDT, have a market cap exceeding $110 billion, but neither of them have announced compatibility with Bitcoin. On the other hand, Stably USD's market cap is currently only $101,000. BRC-20 has been used to launch speculative meme coins like Ordi, Pisa, and Pepe, resulting in a cumulative market cap of over $447 million. BRC-20 is an experimental standard for issuing fungible assets using Bitcoin ordinals. Ordinals have made Bitcoin the second most popular blockchain for NFTs. Corey Huang is the co-founder and CEO of Stably. Well, they met the creator of BRC-20, Domo, at the Bitcoin 2023 conference in Miami. He shared his stablecoin plans with Domo. Domo found it amusing and supported the idea of creating a stablecoin on Bitcoin. The use case for Bitcoin-based stablecoins and tokens is more limited compared to Ethereum's decentralized finance ecosystem. For one thing, BRC-20 doesn't support smart contracts. Domo acknowledged that Taro is a much better solution for issuing assets on Bitcoin. Speaking of market impact, let's turn our attention to the expansion of some major players in the crypto exchange world. These expansions are a testament to the growing acceptance and adoption of cryptocurrencies worldwide. Bybit received in-principle approval from Kazakhstan's regulators. This allows the exchange to expand its operations in the country. The Astana Financial Services Authority granted pre-approval to Bybit to function as a digital asset trading facility and custody services provider. Bybit's co-founder and CEO is Ben Zhao. Zhao sees significant potential for growth in the crypto industry within the Commonwealth of Independent States region. Zhao emphasized Bybit's commitment to adhering to local regulations following a recent regulatory flag in Japan for operating without registration. The approval granted to Bybit is contingent upon meeting certain preconditions. This means that Bybit is on the path that ultimately leads to permanent authorization to serve the local market once the application process has been finalized. Bybit has been actively expanding its services in recent months. On May 2nd, they announced plans to offer crypto lending services to users. Additionally, Bybit collaborated with MasterCard in March to introduce a debit card for cryptocurrency payments. By offering services in Kazakhstan, Bybit taps into the country's growing status as a regional hub for cryptocurrency, mining, and blockchain. In February, Kazakhstan implemented a requirement stating that 75% of the revenue from crypto mining must be sold through a crypto exchange, aiming to combat tax evasion. As a result, the country collected approximately $7 million in crypto taxes in 2022. Furthermore, Kazakhstan is currently in the pilot phase of developing its own central bank digital currency. Gulf Binance is a collaboration between the crypto exchange Binance and Gulf Energy's innovation arm, Gulf Innova. They obtained a digital asset operator license in Thailand. This approval from Thailand's Ministry of Finance allows the country to move forward with its plans to establish a regulated cryptocurrency exchange and broker. This new platform is expected to launch by the end of this year. Richard Tang is Binance's head of Asia, Europe, and MENA. He said that Gulf Binance aims to leverage Binance's expertise and Gulf's established local presence and network to demonstrate the full potential of blockchain technology. Gulf Energy is a prominent private power producer in the region. Thailand has shown a growing interest in positioning itself as a prominent crypto hub in Asia. In January, the country's regulators introduced a set of regulations for crypto custody services. They later announced a $1 billion tax incentive for companies issuing digital tokens for investment purposes. However, the nation's cautious approach to overseeing the emerging market is evident in the 2022 ban on crypto lending and staking services and restrictions on digital asset-related advertising. These measures indicate the government's careful consideration of the evolving crypto landscape. Huobi HK expanded its services to include crypto spot trading for both retail and institutional clients in Hong Kong. They recently applied for a virtual asset exchange license from the Hong Kong Securities and Futures Commission. To comply with regulations, Huobi HK will work with auditors to prioritize compliance and anti-money laundering measures. The introduction of a crypto licensing regime in Hong Kong aims to both safeguard retail investors and foster innovation in the cryptocurrency sector. Several other firms, including BTSE, JPEX, and OKX, have also expressed their intention to apply for the license. Operating through the main Huobi website, Huobi HK will list popular cryptocurrencies such as Bitcoin, Ether, and other major coins. They believe that the regulation of Web3 in Hong Kong will contribute to the global adoption of cryptocurrencies. Huobi remains committed to collaborating with regulatory authorities in Hong Kong and to support the development of a thriving Web3 hub. Although Huobi ranks behind larger exchanges like Binance, Coinbase, and OKX in terms of trading volume, it still has achieved a substantial trading volume of $12.7 billion in the current month. Huobi's expansion into crypto spot trading in Hong Kong and its application for a virtual asset exchange license demonstrate its commitment to providing regulated services while meeting the requirements of the Hong Kong Securities and Futures Commission. However, not all countries are embracing cryptocurrencies with open arms. In a surprising move, the government of Bali recently implemented stricter measures against the use of cryptocurrency for payments. This decision sparked mixed reactions within the crypto community. Some support the ban to protect the value of Indonesia's currency. Others argue for the freedom to choose for their preferred payment methods. Bali wants to emphasize that only the country's Indonesian rupiah is considered legal tender. Bali's governor is Wayan Koster. He announced the decision during a press conference on May 28th. He said that tourists who use crypto as a means of payment will face serious consequences, including deportation, administrative sanctions, criminal penalties, closure of businesses, and other severe penalties. Seems serious. The press conference was attended by Bali's chief police inspector, Trisno Yugoro. Yugoro is the head of the Bali Representative Office for Bank Indonesia. That's the country's central bank. He reiterated that the trading of cryptocurrency is allowed, but its use for payments is prohibited. Violating this regulation can result in a maximum sentence of 1 year in prison and a fine of 200 million rupiah, or $13,000. This announcement followed an investigative report by a prominent Indonesian newspaper called Compass. Now, Compass revealed several businesses in Bali were accepting cryptocurrency payments. Included in that number were a meditation retreat, a motorbike rental business, and a crypto-themed cafe. CoinMap Data is a project aimed at mapping crypto-accepting businesses. They said that there are currently 36 such businesses in Bali, mostly concentrated in the popular tourist town of Ubud. Despite the strict stance taken by the Bali governor and the Indonesian government, the country is preparing to launch a national cryptocurrency exchange by next month. The Ministry of Trade will reportedly serve as a custodian and clearinghouse for local cryptocurrency markets. Initially scheduled to be operational by the end of 2022, the platform experiences delays. And to be honest, I wouldn't have anything to do with custodying my crypto on a centralized exchange run by the government who doesn't like crypto enough to make it legal tender. And this action sparked a wide range of reactions within the crypto community. Some individuals expressed support for the ban, citing the need to protect the value of Indonesia's currency and its reliance on tourist money. Others disagreed with the decision. They said customers and businesses should have the freedom to choose their preferred payment methods as long as they understand the associated risks. The controversy has also led some potential tourists to reconsider their plans to visit Bali. However, community members also defended Indonesia's position, highlighting the country's need for regulations and the protection of its income through taxes. Tourism plays a significant role in Bali's economy. tourism generates nearly 28% of its income and employment opportunities for the local population. A decline in tourism could have negative implications for the island's economy. Now, while we're on the topic of regulations, let's dive into a recent case of crypto fraud that's caught the attention of regulators. This case highlights the importance of vigilance and due diligence when investing in cryptocurrencies, reminding us that while the crypto world offers many opportunities, it also has its share of risks. The CFTC accused 5 individuals of soliciting funds from customers under the guise of helping them trade Bitcoin and other cryptocurrencies, namely David Carmona, Juan Ariano Pera, Moses Valdez, David Brent, and Marco A. Ruiz Ochoa. Because instead of using the funds for trading as promised, the defendants allegedly misappropriated the customer's money. The defendants operated a business called Icomtech, and Icomtech purported to be a crypto trading venture. According to the CFTC, between 2018 and 2019, Icomtech claimed that customers would receive daily returns ranging from 0.9% to 2.8% from crypto trading. They also promised to double customers' investments within 4 to 8 months. However, the CFTC alleges that Icomtech and the defendants did not use the funds for Bitcoin or crypto trading. They're accused of failing to fulfill their promises to their customers. Furthermore, the CFTC alleged that Icomtech agents solicited funds totaling hundreds of thousands of dollars from more than 170 individuals in the United States and other countries. A significant number of those customers come from the Spanish-speaking communities. Apart from the CFTC's enforcement action, the U.S. Attorney's Office for the Southern District of New York also charged the 5 defendants with wire fraud in October of 2022. This too was in connection with the fraudulent activities of Icomtech. The recent enforcement action by the CFTC follows its involvement in a significant Bitcoin fraud case that resulted in a $3.4 billion penalty. In that case, a South African CEO operated an unregistered commodity pool to solicit Bitcoin from people, and then they misappropriated their customers' funds. Given the widespread nature, the CFTC Commissioner Christy Goldsmith Romero acknowledged the challenges of monitoring fraud in the cryptocurrency space. She said 20% of the CFTC's portfolio consists of crypto-related cases, including lawsuits against prominent cryptocurrency exchange Bitcoin and FTX. Commissioner Romero also clarified that the CFTC should not be considered a more crypto-friendly regulator when compared to the SEC, even though the SEC has taken a more assertive stance towards the cryptocurrency industry in recent times. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.